Hey, North Carolina Realtors, here are 5 things that all realtors should know about mortgage lending. Number 1, there used to be a difference between a pre-approval and a pre-qualification. Now the two terms are kind of blended by the mortgage lending industry. Now, technically, a pre-approval means a file has been fully underwritten and reviewed by an underwriter. That is almost never the case now, unless there's something odd about that borrower's income, and upfront underwriting review is absolutely necessary. So what's the difference between a pre-approval and a pre-qualification? You probably won't be able to tell unless you talk to the loan officer and get an idea of what steps they did to actually review the borrower's file. Number 2, if a lender says my appraiser always makes a home appraised, that's not necessarily a good thing. While it greases the skids and makes transactions happen easier, ultimately that person could be getting into trouble, and there's not a service being done to your borrower either. I would look for a different mortgage lender. Number 3, all mortgage banks work more or less off the same margins. We all have the same costs. We all have to perform the same steps in order to get a loan across the finish line. Generally speaking, we're all doing Fannie Mae, Freddie Mac, VA, USDA, or FHA loans. Different banks don't have different magic formulas to get those across the finish line. Human beings need to touch these files. So what does that mean for your clients, your buyers? That means that if they have a lower interest rate, they are likely making up those costs somewhere else. They're investing less in their people. They're relying more on automated processes. And ultimately, you're not getting the same customer service. Number 4, most loan officers are willing and very enthusiastic to call listing agents when you're making an offer. We like to make connections with other realtors, and we can help sort of solidify the viability of the borrower as a buyer. I do this frequently, and I know most loan officers relish the opportunity to chat with another realtor. So ask your loan officer if they're willing to vouch for the buyer from a mortgage lending perspective with the listing agent. And finally, number 5, self-employed borrowers are a little bit trickier than salary-based or W-2 based borrowers. We have to gather more documentation. There's more analysis involved. So if on a Friday night at 9 o'clock, your self-employed borrower wants to make an offer and they haven't started the mortgage lending process, just be a little bit wary.